I'm George Ratziuk with the National Apartment Association, highlighting what you need to know to sort the signal from the data noise in this month's Research Roundup. This past month, economic data pointed to rising uncertainties and offering some surprises. We saw the first estimate of real GDP for the fourth quarter of 2025, and it was much weaker than expected. With economic activity remaining positive, the annual growth rate came in at only 1.4% for the quarter and 2.2% for the whole year. Consumers kept the economy afloat, but they spent less during the key holiday retail season as higher prices and fewer job openings led to slumping consumer sentiment. February's employment data offered another surprise. The latest figures came out alongside revisions for calendar year 2025. Talk about good news, bad news combo. Companies picked up hiring during January. That's the good news. However, data revisions showed that hiring in all of 2025 was much weaker than expected. There were fewer than 200,000 new jobs added to the economy during the year, compared to the 1.5 million created in 2024. In another twist, we saw inflation numbers ticking up. The Personal Consumption Expenditures Index, or PCE, rose again. Importantly, the core PCE, which disregards food and energy prices and is the Federal Reserve's preferred inflation gauge, rose at a 3% annual rate, faster than the bank's target of 2%. At this pace, we can expect the Fed to keep rates unchanged at its meeting later this month. What else did we see in February's data? New construction picked up, but remained below last year's levels as builders worried about consumers' ability to finance a home purchase. Reacting to rising geopolitical conflict, interest rates declined in February, and the Freddie Mac 30-year fixed rate dropped below 6% for the first time in 2.5 years. However, home prices remained elevated, keeping buying affordability out of reach for many people. Not surprisingly, sales of new and existing homes declined. So, what about the rental housing market? Several reports show that new supply continues to outpace net absorption. Vacancy rates reflect the trends, hovering in single-digit territory, while under pressure in oversupplied markets, national rents are showing positive momentum. For people looking for relative affordability, the rental market provides more options than homeownership. From apartments and townhomes to single-family properties, the sector offers lower monthly costs than a typical mortgage payment as we move through the first part of the year. In February, we also released NAA's Apartment Labor Market Dynamics Report. The key takeaway: the apartment market is adjusting. While job postings cooled, continued salary growth and selective hiring indicate that apartment operators are prioritizing operational performance and talent quality. To find these resources and more, visit our website and stay up to date by following NAHQ on social. In particular, NAA's Economic Indicators blog will continue to track key takeaways and insights from interest rates, mortgage rates, and new construction in live time. Don't forget to check it out. Stay well and stay tuned for next month's Research Roundup.